collapse of decentralized finance continues, and today it's all centered around the Solana coin and the Solend DeFi platform, and this mysterious whale who's taken out a massive loan collateralized by Solana coins, and it's threatening to take down the whole DeFi lending platform and possibly the whole Solana network. What's up, guys? I'm nobody special, and before we get into this story, I want to clarify a couple of things. The coin in question here is Solana. Solana is a proof-of-stake coin that works with validators, and I'm not going to get too far into the technicals of it, but it's one of those coins that doesn't consume a lot of energy like Bitcoin does. Now, Solana's claim to fame is that it is fast and it is cheap to use. It can handle more transactions per second and for lower fees than pretty much any of the major coins. Now, the trade-off here is that Solana's network is very unstable. It's gone down several times this year, and if you hold Solana coins and the network goes down, your money's essentially frozen. Now, Solana's price has crashed along with all the other cryptos, but the network has gone down several times, something that's never happened to Bitcoin or some of the other coins. Now, that's the Solana coin. Solend is a DeFi platform where you can deposit your coins in exchange for interest, an absurdly high interest, something I've warned about on this channel many, many times before. And then Solend takes your coins and they lend them out for even higher interest. It's basically a bank. Now, they'll tell you they're not a bank, but it's a bank. All right, if you take deposits and you pay interest and then you go out and make loans at a higher interest rate, you're a bank. Now, there's another piece of this puzzle called a Solend coin, or SLND. The Solend coin is an ownership stake in the Solend platform. It's called a governance token, very similar to a share of stock. So you've got three major factors here. You've got Solana, that's the underlying cryptocurrency blockchain. You've got Solend, is the DeFi platform that allows you to lend and borrow Solana coin. And then you've got the SLND, or the Solend coin, which represents an ownership stake in the Solend platform. Very confusing, I know. Now, to understand what's going on in this crisis, you have to understand how Solend governs itself. They call themselves a DAO, or a decentralized autonomous organization. Decisions at Solend are made in the same way decisions at publicly traded companies are made. In a publicly traded company, decisions are made by people who own shares, getting one vote for each share of the company they own. Well, Solend operates in a similar fashion. They have this SLND token, or this Solend coin, that they've created, and each coin you own represents an ownership of this decentralized autonomous organization. We're going to use the term company. A lot of the crypto bros might jump down my throat at using the term company here, but I'm going to call Solend a company. And if you hold one of these Solend coins, you own a share of the company. Now, the crypto bros get angry when you call it a company or when you call it ownership in the company, because the way Solend coin functions is it's basically an unregulated security that gives you voting rights in a bank. And Solend doesn't want to be regulated like a bank, and can you blame them? It's very onerous. Now, it turns out almost all of the Solana coin on Solend's platform came from this one whale borrower. There is this one guy on Solend's platform who took out a $108 million loan. Then he used $170 million worth of Solana coins as collateral for that loan. Now, under the terms of the loan, if the price of Solana drops below $22.27, that collateral starts to get automatically liquidated. And the price of cryptocurrencies has been crashing lately, so we're starting to get close to that liquidation price. Well, the guys who run Solend realize if we trigger that big sell-off in Solana, a couple of really bad things might happen. Number one, the price of Solana is going to crash even harder, which means the assets being held as collateral on their loans are also going to crash. It's going to trigger a wave of liquidations. It also might trigger a bank run as people go to withdraw their coins from Solend, and Solend may not have the money to meet those redemptions. Another thing they worry about is it might actually crash the Solana network again. Remember, Solana is the coin, it's the blockchain. Solend is the DeFi platform. Well, if we get this wave of liquidations on Solend, it could threaten to bring down the Solana network again. Solana network has crashed several times already this year because it traded its stability in exchange for cheap fees and speed. Now, here's where things get a little sleazy. Yesterday, there was a vote held over at Solend. Remember, if you hold one of these SLND coins, you have a share of the company or a vote in the company. And up for a vote was a decision on whether or not to seize this whale's assets and sell them off how they wanted to in a more orderly fashion than was written into the loan to keep the network from crashing, to keep their platform alive. In other words, their proposed solution was to take his money and sell it their way to save their own necks. And with that, we are going to shrink my big melon of a head and get into this article. This is on CoinDesk, and this is dated yesterday, Solana DeFi platform votes to control whale account in bid to avoid liquidation chaos. Solend users voted to grant emergency power to Solend Labs to temporarily take over the whale's account. Imagine if your money is on a platform that can singularly vote itself the rights to take your money and do what they want with it in order to save their own skin. That is how Solend is operating right now. But it's the details of this vote that really should scare you. Users of Solana-based borrowing and lending service Solend voted Sunday to force a takeover of the protocol's largest account, or a whale, whose extremely large margin position was getting, according to Solend contributors, dangerously close to a catastrophic on-chain liquidation cliff. Proponents of the intervention argued the Solend whale was no typical user. The account had parked 5.7 million Solana onto Solend, or over 95% of the pool's deposits. Understand, almost all of the assets at this bank was this one guy's collateral. Against that, it had borrowed $108 million in stablecoins, far more than anyone else. If the liquidation price of 2230 Solana hit, it would be liable for around $20 million. Solana is currently trading at 32.27. It's a little bit higher than that right now. Despite our efforts, we've been unable to get the whale to reduce their risk or even get in contact with them, the proposal said. With the way things are trending with the whale's unresponsiveness, it's clear action must be taken to mitigate risk. Now, here's where it gets really sleazy. Solend governance token holders who participated voted yay with 97.5% of the vote. The proposal barely cleared the 1% quorum in the affirmative with 1.13% share. So this was a very quickly held vote where very few of these Solend coin holders actually participated in the vote. And it gets even sleazier, folks. Check this out on Twitter. This is from a user named Aaron Wise. Solana-based Solend's DAO, remember that means decentralized autonomous organization, i.e. the company, just passed its first governance proposal. This is the first vote they've ever held. The proposal passed 1,155,000 aye to 30,000 nay. One person voted 1 million of the ayes. Think about that for a second. One person voted 1 million times because he holds 1 million of these Solend coins. I don't know. Maybe it could be the founder of the organization, or maybe it could be some Solend company executive, somebody who granted himself 1 million of these tokens. See, this one guy represented almost all of the vote to seize this whale's assets. Remember the term DeFi, decentralized finance. Well, if one person can vote 1 million times to steal your money and do with it as he sees fit, then how decentralized is that platform? Well, the response to this decision was probably about how you can guess. People were justifiably outraged. How can one guy with 1 million of this random token just decide to steal your money and do with it what he wants in order to protect the networks, i.e. save his own skin? Imagine the possibilities. Imagine the legal ramifications. Imagine the liability. How safe is your money? How safe is anybody's money in these DeFi platforms? So Solend very quickly realized what they had just done to save their own skin had created a PR nightmare, an absolute fiasco. So what did Solend do? Well, they held a second vote to basically say, we changed our mind. And here it is. This is dated today. Solend invalidates Solana whale wallet takeover plan with second governance vote. If Solend is unable to take over the account, some believe that it could cause a meltdown, driving Solana's price to zero. Solana-based decentralized or DeFi lending protocol Solend has created another governance vote to invalidate the recently approved proposition that gave Solend Labs emergency powers to access a whale's wallet to avoid liquidation. After the community condemned the move to take over the wallet, calling it the opposite of what DeFi should be and outright illegal, the Solend team initiated a second governance vote proposal to invalidate the previously approved proposal. That proposal ended with 1.48 million votes in favor of disregarding the first proposal. So what happened? Well, a few more people voted in the second one, and that guy with the million votes basically said, I changed my mind. Everybody hates me. My company is doomed. Okay, I'm going to change my mind. And here is a statement allegedly from that guy with the million votes on Twitter who said, hey guys, I'm 6HFX. I'm planning to vote yes on the second proposal. I don't care about crypto Twitter hate if that means salvaging $120 million of retail dollar instead of holding up DeFi ethos for some whale that is degenerately gambling away 9-figure positions. With power comes responsibility, and the whale is showing none. So what he's saying is, I feel totally justified in seizing this guy's money because, in my opinion, he's not being responsible with his money. So he took it upon himself to take it, and he sees no problem with that. Reading on from his statement, but if we can work out a better solution, and it seems like the market is giving us a bit of time, I think I'm in favor of SLND too. We need to be quick with the third proposal, though. Things can look very different in 24 hours already. So what he's saying is, since the price of Solana stopped going down, it looks like the market is giving us more time, and this guy's not about to get liquidated. And so I'll make the better PR move and say, we're going to come up with a third proposal. Who knows what that might be? Okay, so maybe you guys are a little confused at this point, and I totally get it. I scratched my head a lot trying to get my head around what was going on here. So let me just summarize this as best as I could. This Solana coin is vulnerable to its network crashing because it's traded its stability in exchange for speed and cheap transactions. That makes the network vulnerable to crashing. When the network crashes, the price drops precipitously because people don't like their money getting frozen. This Solend platform made one huge loan to one huge whale, and it looks like it's not going in their favor. And because the structure of this Solend platform is basically set up like a bank where shareholders get all the voting rights, this bank voted to give itself control of this big whale's wallet in order to prevent their bank from failing. And almost the entire vote was one guy with 1 million shares of the company, or 1 million of these Solend coins, who was trying to save his own skin. Well, the public was justifiably outraged at this, so this one guy held a second sham vote and went back on that decision. So today the problem is still there. There is still this one massive bet at this Solend platform, and if the price of Solana dips below $22.27, that collateral is going to start getting liquidated. The Solend platform could fail, and the Solana network could fail, which would send the value of all those coins to effectively zero. So this is just another chapter in this unwinding of all the debt in the cryptocurrency space. Decentralized finance, or DeFi, turned out it was vulnerable to the same flaws of human nature, greed and corruption, that centralized finance was vulnerable to. And now this house of cards is coming down, and it's dragging the whole market down with it. Now, guys, I just want to reiterate a couple of recurring themes that I've had on my channel. Number one, I don't trust these DeFi platforms. When somebody promises you a risk-free 10, 15, 20% return, run. There is no such thing as a risk-free 15% return. Number two, do not leave your coins on the exchanges or, by extension, these DeFi platforms. In precious metals, there's a saying, if you don't hold it, you don't own it. Well, there's an equivalent in cryptocurrency. Not your keys, not your coins. If you don't have the private keys to your wallet, then it's somebody else's coin, and what you're holding is an IOU. If you're leaving your coins on an exchange or on a DeFi platform, you are trusting those people with your money. And as you can see, based on what Solend is doing, they will sell you out the second it is in their interest to do so, just like the traditional finance system and the banks would do to you. And full disclosure, I hold no Solana and no Solend coin. My crypto holdings are limited to Bitcoin and Ethereum only, and my long-term view on Bitcoin remains unchanged despite this crash that I have been calling for months. And again, the big end game here is Tether, something I've been warning about since day one on this channel. All of these DeFi apps and all of these companies going under, it's all leading up to the collapse of Tether, which I believe is just around the corner. And when that happens, you are going to see a massive, massive capitulation in crypto markets. That will mark the bottom for this cycle. Until next time, live small and dream big.